Hello and welcome. This is Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Well, the National Identity Number registration exercise commenced again yesterday after NIMC workers returned to work. The workers suspended their two-day warning strike last week to give room for negotiations with the federal government. However, the countdown of the 21-day ultimatum, which they gave the federal government, continues. Workers of the commission had down tools on Wednesday and Thursday last week over fears of being infected by COVID-19 while carrying out the NIN registration exercise. Honestly, for me, I think the federal government should just call off this
deadline, right?
Name registration for now, because you cannot say you're trying to curb, the continuous rise of the virus, the infection, and then you're creating avenue where people would still, get infected.
Exactly.
Well, I read in the papers, I think the federal government is thinking towards that. And the earlier they take that decision, the better.
The better. And who would have thought we'll be hearing about striking?
And I wonder where that will take us to.
Yeah. So, well, in the meantime, accredited customers with the Corporate Affairs Commission have been advised to revalidate their personal details before March the 31st. And this is according to the Registrar General of the Commission, Mr. Garba Abubakar, who explains that the move has become imperative following recent drive by the federal government to link up information with the National Identification Number.
Every accredited customer must revalidate his accreditation with the Commission before the end of March. This is necessary because we have recognized the fact that some of our customers, some have died, some have changed their details, some have changed their location without updating the database. Some have even given their account to other people to manage it on their behalf. So to ensure the integrity of the information we are going to be receiving from these accredited customers, all existing accounts must be revalidated before the end of March. And by 1st of April, any account not revalidated will cease to have effect until the customer comes forward to revalidate. And the process of revalidation has been simplified. Everything is done electronically. They don't have to visit our office. Once they log into the company registration portal, there's an interface for them to apply to register as accredited customers. And the documents they need to upload includes the evidence of their qualification, either as lawyers, accountants, or chartered secretaries, the evidence of payment of their practicing fee for the immediate preceding year, as well as their means of identification.
It's looking like the year of registration, 2021.
Well, maybe they would probably have to find a way to see how all of this registration thing would have to play out. And what gave rise to this actually is this NIN registration thing. So they have to link the numbers to every details of everything you have, including your bank account. I hope you know that.
Oh, yes.
All right, and here is the latest on the AFCFTA. Members must complete their tariff reduction schedules and finalize essential rules of origin by July. Under the agreement establishing the AFCFTA, members must phase out 90% of tariff lines over the next 5 to 10 years. Another 7%, which is considered sensitive, will get more time, while 3% will be allowed to be placed on an exclusion list. African countries began officially trading under AFCFTA more than a week ago after months of delays caused by the global coronavirus pandemic. The AFCFTA aims to bring together 1.3 billion people in a $3.4 trillion economic bloc, which will be the largest free trade area since the establishment of the World Trade Organization.
And now let's look at oil. The global oil update, and the oil prices slipped this morning as investors remain concerned about climbing coronavirus cases globally, but expectations of a drawdown in crude oil inventory in the United States for a 5th straight week kept losses in check. Brent crude oil futures slipped 10 cents to $55.56 a barrel, while U.S. West Texas Intermediate fell 8 cents to $52.17 a barrel. Reports from the industry group American Petroleum Institute is expected later today, and the Energy Information Administration, the statistical arm of the U.S. Department of Energy, on Wednesday. Goldman Sachs says Brent would rise to $65 per barrel by summer 2021, driven by Saudi cuts and the implications of a shift in power to the Democrats in the United States. The Wall Street Investment Bank had previously predicted oil would hit $65 by year end.
Okay, and we will be talking about the manufacturing sector. What is the outlook for this sector in 2021? Yeah. Is it one of the sectors that would actually drive the growth in the year? And we'll be joined by the Managing Director, Coleman Wires, George Onofowokan, next.
Mr. Onofowokan joins us now on Business Morning. Thank you for joining us, and Happy New Year.
Happy New Year to you, sir.
Happy New Year to you too.
Good to see you.
Thanks for having me.
So as an operator on the manufacturing sector, what challenges would you say you had in 2020, and what did you learn from those challenges?
I think the first challenge anybody would talk about was the lockdown.
Okay.
That was a shock to the system, and it was also a shock to trade and manufacturing. So when you look at that and the effect of the 6 weeks lockdown, 2 weeks lockdown, which was the expectation went from 2 weeks to 6 weeks, and from some other businesses to 6 months. Right. And so when you look at those aspects, that was the biggest shock of last year. And it's taken a lot for most companies to come out of it. Some never did, which is the unfortunate part of last year. A lot of businesses also went down with it. And I think it's the learning curve of that we also say that we've learned a lot, because something we've never experienced, we actually have to come out of it a little bit better. And I think one of the biggest criteria was people having to restructure, refinance, reproject their earnings for last year. And it was more of survival rather than a projection of growth.
Survival of the fittest.
That's basically what happened last year.
All right. Now, the optimum productivity of the manufacturing and, industrial sector is said to be key for other sectors, to reap optimal gains, this year. Now, looking at some of the reforms introduced by the government, we have the CAMA law. There's also cost-reflective tariff. There's also the removal of the subsidy. Okay, so how do you see these reforms driving the growth of this sector in 2021?
I think the reforms are commendable. But the key thing in any reform, it's what's the reality. The CAMA law is a bit more progressive towards the SMEs and the MSME businesses, which is good. The Finance Act is a bit more progressive also on the MSME businesses in terms of taxation. And when you look all around, these are good. But sometimes I always say, look, what is the reality? Now, is it all about reforms of laws, or what do we do to create the realities of enabling businesses to actually do better? Now, if you take, for instance, we've been talking about the port congestions. I think this is now going back a couple of years now. Last year, it's even worse. Right. Now, to me, I think we're getting to a situation where we are creating inflation unofficially. Now, we make assumptions of how to ease business, but then we create bottlenecks somewhere else. Now, if today it takes you 1.3 million naira to take a container out of the port into your warehouse in Lagos, not out of Lagos, then I ask you, something that I used to do for 90,000 naira has now cost me 1.3 million. Correct. What is the cost of that product or the raw material? You've hiked it up. Now, so the reality is we're looking for solutions of reforms, but we are not looking at what creates cost increases in any business, especially manufacturing. Because the bottom line is you're looking at your cost of production. So if my cost of carriage, already we've devalued the naira. Now, you now have additional cost on top of it, which is a case of logistic cost has now gone up. Then the demurrage cost has even got worse because now your goods don't come out in 5 working days anymore. They come out, if you're lucky, in 2 months. I've got containers at the port now that yesterday I was told has already done 60 days.
Wow.
And some of these are not helping the cost reduction that the government is trying to do with some of these reforms. So those are the realities. And these are the realities that we had a bad year last year. We are already in a new year. And we're still seeing the same problem. What do we do to elevate these problems? And that, I think, should be the first point of call. How do we get this cost down so that inflation could come down? So if you're looking at manufacturing inflation cost that has gone up and benchmark all the inflation rates and look at where yes, we all know agriculture has gone up. Yes, borders are opening up. We're trying to balance what we can produce and what we can't. But nevertheless, we are a country that is looking for industrialization, but we cannot benchmark cost up and then expect benchmarked inflation to be down or manufacturing costs to be down.
Now, you are a player in this sector, you operate in this environment. You're talking about, okay, what do we do? For you, what should we do? I mean, looking at the fact that the central bank, yes, is talking about backward integration, you know, for those of you that do business and you import a lot. Look at the amount, and NBS is telling us that, I mean, they spend on importation 9.28 trillion naira just on importation. Okay, so how do you backward integrate? How much of that do you apply in doing business here in Nigeria and perhaps your other members of your association?
First and foremost, I'm one of the people that believe I'm very passionate about made in Nigeria. I'm very passionate about local manufacturing, and I'm very passionate about creating job employment through industrialization. Now, but we need to toe the right part. Central bank figures, central bank interventions are very good. Development bank interventions are very good. But the question is what sometimes is the reality. And we need to have synergy. Now, take, for instance, the central bank. You're looking at, okay, we've saying we have in manufactured imported goods of 9.2 trillion. And we've been talking about backward integration. We were talking about moving manufacturing into Nigeria. We've been talking about increasing manufacturing. And it's a necessity, especially now that we're going into AFTA. We don't want to turn to the buying country of the whole of Africa. We really need to turn to, we need a balance of trade. And the balance of trade means we need to have a balance of export against import. Now, if we're going to create a balance, how? Now, we have deficiencies in Forex, fact. How do we improve? We need to have targeted directions. And what I mean by targeted directions, now you have an intervention fund. I'm a beneficiary recently of intervention fund. Quite a lot of manufacturers have benefited from the discounted cash cash funds that is being put together by CBN. Now, the question I asked when some of us got this fund is, it's for manufacturing, it's for backward integration. For instance, Coleman is building now the first marine cable factory in country, and will be the only marine cable factory in Africa, second in Africa. We're also doing the first fiber optic cable, which will be done by September. Will be the third fiber optic cable production in Nigeria and in Africa. Now, fantastic. But the question I asked when I actually got some of these funds is, where's the FX? Now, you've given us funds, every manufacturer funds, or some of those that are benefited, funds for this manufacturing. You have machines to buy. We couldn't get the FX. It became such a bad scenario that I had to go back to the bank and borrow again Forex to buy machines for backward integration. Now, you've got this subsidy, 9% interest rate from the central bank, which is currently running at 5%. But you have no access to it. And one question I asked when there was a stakeholders meeting, I asked the DG of LCCI to ask this question, and also the MAN DG. I said, one question, please. Are we collecting money to bloat the balance sheet of commercial banks? Because if you've given me billions, and I've given it to the bank, to please find FX for me to buy machines. And I've got no FX in 1 year, and I'm still paying interest. I asked the question, then what's the point of these development loans? So we need to actually target what the solution is. If you tell people, come and develop, do backward integration, you must make sure the FX is available for the machine. Secondly, now, how do you solve any manufacturer's problem? Raw materials. Some are local. In our case, we're lucky today, we can say we're getting to a situation where we're about 60% local. And this is fantastic, and we're trying to get it better. Part of the backward integration, which we're also doing, is to actually improve the figures to about 80, 90%. Now, which is also part of this funding. Now, the question is, when you're looking for local source, and you don't have the funding for some of the key raw materials, and the funding is not available, then we go back to the black market scenario. You go back to the alternative market. You go back to the
parallel
market.
So that means there's still a heavy dependence on imported raw materials then?
A little bit, but it can be critical. It might not be major, but it's just like in cable. You have different aspects of materials that make up a cable. So if I want to make an armored cable, for instance, I'll have the copper content, maybe aluminum copper content. I have the PVC content. I have the steel content. Copper, I can get some part of it locally now, which is good. Part of PVC, I can get part of it locally. Steel wire, I can't. Now, but without the steel wire, that cable is not complete. It might be only 5%. But it is not complete. Now, but what makes us different, I'll say, as a country, is to move into an export scenario, which we are also moving into. Right. So if you want to tackle anything, we need to make sure we enable even the 5% so that the person can be competitive. Since he's already got 80, 90% local, there's no way he's not going to be competitive out of Nigeria.
Okay, Mr. Nofoke, just a quick one before, we end this conversation. So looking into 2021, what is your outlook? Is it bleak? And with the rising cases of COVID-19?
I think it is going to be, for me, I'll say I'm still a bit more optimistic, but I'll say it's stable to negative. What I mean by that is stable to negative. The outlook of business, especially now, because no economy wants to shut down anymore. So we've got a bit of stability. Stable to negative in a situation is the scenario of what we have in terms of the bottlenecks that is making business a bit difficult, and COVID we might still have a bit of a rise, but we are going to have to manage it. But I will say one thing, with every economy that we have all seen today, is that the rebound of COVID has been very positive to most economies. And it is going to be positive to the manufacturing sector as long as we play the right tools and we get things right. Once we play the right tools, I think Nigeria will benefit a lot from the rebound.
Thank you very much, Mr. Nofoke. It's always a pleasure having you. And please do come back again.
Thank you very much
Thank you for joining us.
Okay. Commodities market update is next. Nasike Wajide, one of the research analysts with financial derivatives company, is here with us for update on the domestic commodities market. Good morning, Nasike. Good to see you and Happy New Year to you. We haven't seen this year.
No, we haven't.
Happy New Year to you.
Happy New Year.
All right, let's begin with this planned closure of the Third Mainland Bridge for 2 weeks. That's a lot.
Long time.
Okay, so this may be necessary, but certainly has some kind of implications for the domestic commodities market, right?
Yes, it does. Not just the domestic commodities market, but the Lagos state as a whole. I mean, it's one of the 3 bridges between the mainland and the island. So obviously the impact, the first impact that will be felt is the impact on man-hours, the man-hours it takes from people trying to commute between the mainland and the island, and the impact on productivity, the negative impact on productivity. The next impact is the increase in transport costs, which would affect anybody who's hauling anything between the mainland and the island, especially commodities, food, whatever. So we expect the increase in costs to affect not just transport costs, but there's the possibility that this second wave of COVID-19 could even make, as part of the guidelines, have the buses have a lower number of people on each bus, and that would further increase transport costs. So we're looking at those 2 scenarios, and it's something that will be interesting to watch in the next couple of weeks as it plays out.
Okay, so on your price movement chart, you talked about food inflation rising as shipping costs climb. Can you explain that?
Oh, yes. It's I'll go back to something the earlier speaker said. You have a scenario where there's major inefficiencies at the ports. You have increased costs between the ports and, say, mile 2, for instance. It used to cost about 90,000 naira to bring things to mile 2. Now it costs about $3,000 to $4,000. So we have a weaker exchange rate. so you have more expensive import costs, as it were. Then you have increased costs for bringing it from the ports to the market, so to speak. So that's every importer will just push on the burden of the cost to the markets, so to speak. So that's.
So it's not just all about insecurity or the flooding in the north now that is causing, we're now having issue of shipping costs.
Yes, that remains a problem. Insecurity up north, where in some areas we hear that bandits, you have to pay some sort of fee to the bandits to allow you to plant and pay some sort of fee to allow you to harvest. So whoever is doing that will add increased or the extra cost on whatever he's selling. Now we have this inefficiencies at the port adding to the increased cost for imported commodities as well.
Okay, still looking at that price movement chart there, you talked about beans being 10% higher post-festive season. What has kept the price of beans high?
Prices are sticky downwards, as it were. We had the festive season, which just finished. We had increased demand, even if it wasn't as the increase in demand wasn't as high as we would typically see, and it seems due to people having lower consumer demand from lower disposable income, as it were. So we typically see the price of goods rising, and most of them falling after Christmas. Well, the price of beans has stayed high, probably because the supply of beans has not been as high as it were, because this is the harvest season, so the supply of beans should be higher, but we've not seen the supply of beans, probably because of the banditry up north, the insecurity that has reduced the supply of beans in the market, and the demand is still there, so the prices might stay as probably. This is forecast to stay this high for next couple of months.
Wow. So one of the goodies is that the price of wheat and sugar has dropped. How would that support the price of commodities derived from wheat, like bread, and how sustainable is the current price?
The reasons why the price of wheat has dropped is at the moment it's actually counterintuitive. The fact that it fell in spite of a shortage. So what we expect to see in the coming weeks is an increase in the price. So not a fall in the price. I mean, right now it fell. Before it was like a blip on the radar. Yeah. We're expecting in the coming weeks, due to shortages and increased demand from the Chinese, we expect to see a rise in the price of wheat and other grains.
So even this one, we're saying that the price came down, and we're hoping that perhaps bread price will perhaps come down. There's no hope.
No, it's a blip. We expect the shortages, global supply shortages, and increased demand from China to push up prices in the coming weeks.
All right, you talked about China's inflation rising, renminbi strengthening against the dollar. How does that impact Nigeria's domestic commodities market?
Okay, China is the second biggest economy in the world, and for the past 5 months, there's been a decline in Chinese inflation from about 2.5% down to a negative of 0.5% in November. So we're seeing December inflation recover as it were. So it sort of supports the narrative of a recovery of the Chinese economy. Increased consumer, it was food, not just food inflation, but also cost. So there's increase in consumer demand in China. The Chinese recovery so far has been, the empirical evidence points to increase in industrial output. But if we're also seeing an increase in consumer demand, then we know that, okay, this recovery is for real and it's sustainable. The Chinese renminbi, okay, the real rate of return in China is about 3.65% compared to elsewhere in the other advanced economies, not just advanced economies, where you have negative real rates of return at this point in time. So you have a lot of capital flows by investors who are bullish on the Chinese recovery, and that has supported the strengthening of the renminbi against the US dollar that we've seen some weakening in the past couple of weeks. So that's strength of the renminbi, as it were, would increase how much the Chinese, the impact of like 1 million renminbi importing or used to import goods from Africa and Nigeria and whatever we sell to China, so they can buy more of whatever it is they used to buy. Okay. So that's strengthening of the
So one
Chinese
of the
currency.
downers is the CBN debit of the bank's CRR. What implications will this have on the commodities market?
The debit in the CRR is supposed to curb inflation. Yeah. It's supposed to take out liquidity from the system, and that would decrease the demand for commodities, so to speak. So it's not necessarily a downer. It reduces the amount of, reduces the demand for forex in the system, which is strengthening forex, reduce inflation, strengthening forex, and if you strengthen forex at this time, you will bring some stability to the forex market. You reduce the amount you spend on imports. So it's not necessarily a downer.
Yeah, but that is going to affect, likely going to affect the bank's lending.
Yes, so banks lending is at this time. The CBN is shifting its focus this year more to price stability. As the bank lending is something that should stimulate growth, which is like a fiscal policy objective. But CBN we forecast the CBN is shifting to more to price and exchange rate stability, which is why it's focusing on CRR to remove that much liquidity from the system.
Now, for you at FDC, what do you expect from the upcoming MPC meeting? That's the first for the year. What do you think the committee will do this time?
We think that they will maintain status quo and watch how the events play out, watch how all the other tools that all the other policies that they've implemented play out till the second meeting before any drastic action is taken of a rate hike or further cuts. But I think at this first meeting of the year, they would maintain status quo.
All right. Now it's the second week into the, into the new year. So what's your short to medium-term outlook for the domestic commodities market and, of course, the global oil market?
Okay, I'll begin with the global oil market. Right now, the sentiment is positive. The overriding sentiment is that of the emergence and deployment of vaccines. Yeah. Then there's the Saudi Arabia who took the markets by surprise and yanked off 1 million barrels of oil, plan to yank off 1 million barrels of oil for the next February and March. There's also, at the back of out the corner of the eye, the EIA just said something about shale oil having some sort of recovery. Now, if you're removing 1 million barrels of oil off the market, it's market share that can be replaced by someone. If you do that, the price rises. The price of oil will rise if you remove that much supply. Then you have the increased price incentivizing shale output in the US, and anything above 55 is incentive for production. So these guys, we expect that they will pump more oil into the market, and we might go back to where we came from. For the domestic market, we expect increased exchange rate volatility as as companies start demanding for forex to build inventory. We saw the forex market depreciate yesterday, the parallel market, to about from 472 to 475. We expect pressure in the parallel market to continue for the next couple of weeks as demand for forex rises, which will affect the import cost of any commodities in the market.
All right, thank you very much, Nosike, for your time.
It's my pleasure.
All right, we'll take a moment. We'll be back. All right, the trading week started on a good note, but Eddie, just before you take us into yesterday's trading activities, the stock exchange last week intensified its demutualization plans. Tell us more.
Yes, good morning, Jimmy. You're right about that. I'd just like to start by congratulating the newly appointed chief executives of the Nigerian Exchange Group PLC. Now, the CEO of the NSE, as we know it, was appointed the group CEO of Nigerian Exchange Group PLC. We have Temi Popola as the CEO of Nigerian Exchange Limited and Tinu Adeawe as NGX Regulation Limited. Now, however, these appointments are still are still subject to approval by the Securities and Exchange Commission. The NSE also took it a step further, and they inaugurated a 5-man claims panel review committee, still in line with the demutualization process. And that committee is being chaired by Judge Etomi, who will be joining me now to give us some insight, as to what the panel will be doing. Good morning, Mr. Etomi. Thank you for joining us on the program.
Good morning. How are you today?
Very well, thank you. Well, congratulations on your appointment as the chairman of this panel. Now, we all know that the demutualization process, has been on the talks have been on for a very long time, and then now they're, in full swing. Could you just tell us, what is your mandate? What is the mandate of this panel, first of all, and what would you be doing as chairman of the panel?
Well, the mandate is a very clear mandate, and as you correctly said, following the demutualization of the stock exchange, it's been converted to a public limited company. And the original founders, plus all the other dealing companies, will then constitute the body of shareholders. As you are aware, companies are made up of shareholders. Now, all these shareholders will now be allotted shares to represent what, in the wisdom of the stock exchange, would be the relative contributions to this new company. It is that process, if it is disputed, that then goes to the Council of the Stock Exchange for resolution. If they're unable to resolve it, it goes to the Claims Review Panel sitting in an appellate capacity. The whole idea is to have these disputes resolved as quickly as possible. So the initial appointment is for 3 years, renewable for another 3. And as you're aware, if you have any claims, generally speaking, you have a 6-year window to bring it. The whole idea is that as the stock exchange reinvents itself and becomes very competitive on a global scale with other well-known stock exchanges, these things normally happen. It's a very good development for the Nigerian economy. And I think many of us are looking with excitement at the prospects. This is a road never before taken, so there's an element of pioneering work involved. And I'm honored and humbled to chair a panel made up of high-caliber professionals. Mr. Sheni Adio, Senior Advocate of Nigeria, Professor Paul Ananaba, Senior Advocate of Nigeria, Prince Erediowa, and Mr. Abacha Bulama, 5 of us. And the quorum is 3. Many of us have experience in capital market work, and it is expected that we can bring resolution to any of these disputes in the shortest possible time.
All right, Ms. Aitomi, thank you for shedding more light on that. And I'd just like to say good luck in this new process. I mean, we would all love to see the Nigerian Stock Exchange be able to compete with international counterparts. Thank you for your input on the program.
Thank you.
George Itomi is the chairman of the Claims Review Panel. Now, let's just go, focus on the numbers now. The market began the week on a positive note, although not so strong, but at least we could say it was up by 0.01%, like Chimi told me yesterday, with the all-share index up 40,150.78 points, while the equity cap was at 994 trillion naira. Now we're nearing the 21 trillion naira mark. The activity level was mixed. Volume was up about 0.8%. We saw 335.699 million units worth 2.489 billion naira. And all of that was traded in 5,338 deals. Now, sectoral performance was mostly positive. The banking index was up 0.19%. Now, we saw a lot of, stock interest in the banking sectors and the consumer goods sectors, and that was what drove the market yesterday. Industrial goods was unchanged, while insurance declined and oil and gas was up. But to talk more about the market is Phil Anegbe, a research analyst at Cardinal Stone Securities. Good morning, Mr. Anegbe. Thank you for joining us on the program.
Yeah, good morning, Nigerian.
Now, could you just tell us more, walk us through trading yesterday? We saw some gains in the banking and consumer goods sector. What should we be expecting, from trading today?
Yeah, for trading today, you expect a bit of mixed sessions in the market across the different sectoral indices. Yesterday, we got uplift from from the banking sector. We saw some investors take advantage of some names after the prior days of sell-off. So that pattern is likely to subsist today. We still see opportunities in other sectors away from bank. WAPCO, in our view, is still the most underpriced stock in the cement space. And then you expect that a few consumer names may also gain the attention of some investors, given the recent sell-offs we've seen in some names, even though some are more or less largely fairly priced.
Well, Dante Cement announced the completion of the first tranche of his share buyback program yesterday. Now that exercise has been completed, what should we be expecting from the stock?
Well, you expect that now that the exercise has been completed, some investors, particularly those that didn't have the chance to participate in the transaction, may decide to actually offload some of the allocations to Dangote. So you may see some sell-offs, and that has been like the pattern in some days. You may see some sell-offs, and a few others may actually be anticipating more information on when the remaining tranche of the transaction will come on board. But for now, you expect some sort of sell-offs and profit-taking in the name, given that there's been an official communication from end to the first batch of transactions.
All right, Mr. Anigbe. Well, just before I let you go quickly in 1 minute, I mean, I had a conversation with Judge Itomi, the chairman of the Claims Review Panel of the NSC. I mean, with the whole demutualization process going on, the new appointments, you know, what do you make of that? And what does that say about the corporate governance structure of the Nigerian Exchange Group PLC?
Well, demutualization, as we've seen in different parts of the world, is actually going to help to reduce bureaucracies and strengthen corporate governance structure for the board, as well as present opportunities for would-be investors. But it stands now, one would have to sit and watch the events unfold. But I know that a number of participants in the space are actually on the lookout for it. So we expect better governance structure and lesser bureaucracy once that is fully instituted.
All right, Mr. Anigbe, thank you for your input on the program. Phil Anigbe is a research analyst at Cardinal Stone Securities. Well, Chimi, there's a lot going on at the Nigerian Stock Exchange, and I hope investors, will, position themselves nicely and react to that favorably.
Well, if you will permit me to do my own projections, my thinking, the investors will still maintain this wait-and-see mode until perhaps next week after the MPC meeting. So for now, I think we'll be seeing more of cautious trading. Am I right? I guess.
Right.
I guess. That's
right,
my own projection.
Well, you're right, Jimmy.
Okay. We take another quick break, and when we come back, we do an opening call to London.
And now for updates from London, Juliana joins us now. Hello, Juliana.
Hi, Laddie. Good morning.
Good morning. Good to see you. Yeah, so UK has removed the United Arab Emirates from the list of travel corridors. Meanwhile, pre-departure COVID-19 testing will be required for everyone traveling to the UK from Friday. What are you learning about this?
But it's interesting, the Middle Eastern holiday hotspot was trending on social media over the past couple of weeks, and it wasn't just Nigeria's political elite and celebrities enjoying their festive period there. There were a lot of British influencers. So for many of us here in Britain, it's no surprise that the UK Transport Secretary Grant Shapps has swiftly removed the UAE from our corridor hot list, and that's really because the cases have more than doubled over the past week. It came into fruition at 4 o'clock this morning. So if you are coming from the UAE, so Dubai, Abu Dhabi, into the UK, you will now have to self-isolate for 10 days. We've also got this new PCR testing system in place months and months and months after other countries around the world, including Nigeria, have already adopted that practice. That actually takes place on Friday at midnight. But if you're coming back from the UAE, then you must have taken one of these tests within 72 hours. And again, of course, that's to try and curb the growing spread of COVID-19 in this country.
And Rishi Sunak was before the House of Commons yesterday and warns that Britain's economic performance will worsen before the coronavirus vaccine helps to improve the outlook for jobs and growth. Is there likely to be more restrictions? What sound bites are you getting?
Interesting, we had a little bit of breaking news. Well, for sterling, actually, sterling jumped a little bit higher against the dollar, and that's because Andrew Bailey, the Bank of England governor, is currently speaking right now online to the Scottish Chamber of Commerce. He's been speaking about the economy, and he doesn't predict that this lockdown that we're currently facing will be as bad on the economy as was the one in March. Traders really loved that statement. He also said as well he doesn't expect unemployment to rise to 7 to 8%. That was his projection about 6 months ago. Unemployment in this currently stands at about 4.9%. Historically, internationally, still quite low, although he doesn't believe the data is providing a full picture of what unemployment in this country currently looks like. A little bit of breaking news there. But going back to Rishi Sunak, yes, the Chancellor of the Exchequer was speaking at the dispatch box in the House of Commons yesterday. Unfortunately for the business community, Treasury. There was no special surprises. There are going to be no further economic packages for businesses. He stressed that already over £250 billion has been given to try and help struggling, beleaguered businesses already. Yesterday, we were discussing the data from the Federation of Small Businesses, which suggests that over 290,000 firms may collapse this year if they don't receive support. We are expecting a budget on the 3rd of March, and he said he will outline what more can be done at that time. Going back to the restrictions, yes, there were so many rumours that even though we are in a national lockdown, restrictions could increase. There were some talks of curfews. There were some talks of only one person being able to leave the house for exercise. Now, Prime Minister Boris Johnson did warn that if people didn't take these restrictions seriously, then there would be further restrictions. And I can tell you that most people in the country are, although there are a growing small minority that aren't taking these restrictions seriously. So we'll have to wait and see. But I think this week, the focus of the government is to try and let the public know that the police will be very strict. And if you don't adhere, you will be fined.
Right. So the British footwear brand Dr. Martens is planning a £3 billion flotation more than 60 years after its first pair of boots were stitched together in Nottinghamshire. How much do we know about this stock market?
Yes, interesting story. I've never owned a pair of Dr. Martens, though they are very, very popular. They are a classic British footwear brand. And if this IPO does indeed happen, this will be the first big IPO of the year. They sell more than 11 million pairs of shoes every year from 60 countries across the world. It's currently owned by an investment firm called Permia. Permia owns 75% of the company. They bought it for about £300 million in 2013. They are the ones who are putting out this float, and they plan on floating 25% of the company. So, yeah, it's a pretty good story for a household British name who seems to have fought off some of the weaknesses we've seen in the retail industry because of COVID-19.
Okay, I guess we'll see how the debut goes. Thank you, Juliana, and do enjoy the rest of your day.
Thank you.
Thank you. So for the debt and currency market, Eddie is back on board.
We'll be focusing on the debt market, well, the fixed income market today. And the bond market yesterday started the week on a mixed note, although bearish, as we saw some profit-taking activities, particularly in the March 2027 bond. Now, we saw yields rise across the short and the mid end of the curve. On Monday, we had just 12 deals worth 4.42 billion naira. But let's talk to Ramat Baba, the chief dealer of fixed income at FBN Quest Merchants Bank, for more. Good morning, Ramat. Thank you for joining us on the program.
Good morning, Eddie, and Happy New Year.
Happy New Year to you as well. Well, the bond market has continued its bearish sentiment. How long do you think that this will continue?
I think this will continue for as long as the market takes to get clarity on what the DMO will be doing after the auction calendar for Q1. Today started with the news of a proposal of about 240 billion on auction on offer at each auction. That's 80 billion for the 2031s, a New Year bond, the 35 and then the 45. Prior to now, we were having between 100 and 150 billion on offer. But because market is speculating about 240 billion being on offer at the next 3 auctions, of course, a lot of people are going short, selling off, and then opening new positions to cover at the auctions, because there's an indication that clearly the DMO will be offering so much at the next few auctions, yields are expected to rise up. So it's pretty much people just opening up new positions this year.
Okay, well, the Treasury bills market has been a bit quiet. I mean, yesterday, that segment of the market and the special bills market, we didn't see any deals. So what's your outlook, or what should we be expecting from the Treasury bills market, Nigerian Treasury bills and OMO bills?
Okay, it's been really slow in the Treasury bills market for now. In fact, for the last few weeks, it's been very slow. I think the attraction has been more on the OMO bills. We see a lot of people going for the OMO auctions, both the offshore and then some of the banks. And, of course, some of them sell off right after the auction. And I think that has been aided with the fact that the yield at the OMO auction is at the top five levels, while in the secondary market, those same securities are trading at about 1.5 to 2% levels. So it's been a clear arbitrage opportunity for several people.
All right, Ramat, thank you for your input on the program. Enjoy the rest of your day.
You're welcome.
Ramat Baba is the chief dealer of fixed income at FBN Quest Merchant Bank. Ochimi and Ladi, well, that's the market for today. Hopefully, the bonds are rising, so investors are probably smiling in that space. And then the equities market holding a wait-and-see position. So let's see what happens.
Yeah.
Absolutely. And
we'll see.
Ladi, you always give me updates on the Bitcoin. Our investors also smiling there.
Well, it was a sea of red yesterday, so I would say they were not smiling.
That was yesterday. What happened this morning?
So, but today there's been a recovery, just a little bit. About 35,000 today.
I still will not look at that market.
Yeah, that's if you bought the dip yesterday,
We can talk about it, but I will not invest in that market.
Yeah, it's fine.
Be an investor.
It's fine.
All right, that's a wrap on the program for today. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.